Hi there. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. We have a small issue with the terminal, but nevertheless, we'll try to get you all the updates as much as possible. Firstly, the key news and things to watch. So, one, unfortunately, viewers, no clear signs of any kind of immediate resolution in the Russia-Ukraine issue, much as all of us want that to happen. That ain't happening, and that has its impact on oil, which I'll come towards the end of this. Both oil and steel, I'll come towards the end of the trade setup on that. The flat, what is to be watched out for? I think in a week which is devoid of any major central banking data, I think the flash PMI numbers for the euro area for March, which will come out on Thursday, would be watched very keenly by global market watchers, simply because since they are coming out for March, it will be interesting to see how much of a damage has the conflict had on growth in the European region. In terms of what's happening within India, well, the Japanese PM held talks with Prime Minister Modi, announced a large investment target in India over 5 years. Suzuki did some announcement or a tie-up with the Gujarat government as well. So all of that portends really well for an Indian market watcher per se. It's great to see investments coming into the country, right? So that's actually one good thing. Now, just keep in mind, viewers, we'll have a start which is maybe marginally positive, simply because I think the SGX Nifty indicates a number of around 17,389, if I'm not wrong, or thereabouts. We closed at about 17,289, plus or minus, I mean, give or take about 25 to 100 points in the green is how we could start off. So you need to keep that at the back of your mind that the start will have some positivity. The US markets had ended well, remember that. The pickle is that the futures are not doing all that great, about a 1/4% lower. So flattish move, if you will, on the US market futures. Oil has jumped up a little bit simply because the conflict is not showing any signs of slowing down. And that is a bit of a pickle. At some point of time, we'll get you the SGX Nifty numbers as well. But what about the trade setup? Well, I think one thing to keep in mind, the mood doesn't seem to be bearish. I think I was looking at Dr. C.K. Narayan's weekend column, and he mentions that with around 16,500 as stop, which is a very deep way away, by the way, but he's talking about playing some longs, so positional longs, if you will, in some fashion. He is, of course, saying that the markets could go either way, so keep that at the back of your mind. Now, to my mind, the market is likely very neutral in positioning. And last week's gap ups have induced some bit of confidence in the bull. Why do you say neutral? Is because those two gap ups squeezed out some of the shorts, but I don't think too many longs came into the picture as yet. I think most people that you talk to are very circumspect about this rally giving way, because the overarching theme of the war still stays as an overhang on most people's minds. So therefore, I don't think there are too many longs in the system, and very likely, to my mind, it's neutral in its positioning. What can do well? Well, if banking does well, because IT will certainly do well and help the index today. If banking does well, then we have a clear shot of some more up move. But IT most certainly will do well, because Accenture results and commentary will help Nifty IT, which I think in turn will augur well for the Nifty. I think retail money could look for opportunities in small sectors. There is paper, there was sugar some time back. Real estate has had its bit of a correction. I know that, again, one theme or one belief is that a rising interest rate scenario will dampen real estate. The question is, in the bounce back that has happened, we haven't seen more. I mean, we haven't seen real estate really bounce back really, really smart, right? So, I mean, DLF corrected quite viciously, is back a little, nothing too much. So, therefore, uh, I think retail money will focus on some of those wherein there seems to be promise of earnings growth, as opposed to it being linked completely to the commodity cycle. Yes, real estate is linked to commodities, paper is linked to commodities. Sugar maybe not as much, not as badly linked to global commodities, because it's an ethanol play, which is more domestic in nature. Sugarcane price also fairly domestic in nature, not quite set globally. So all of that is interesting. And why playing global is a bit risky is something that I'll tell you because of the Morgan Stanley note, which I'll come to a bit later on. So this is more or less the trade setup to my mind for the day today. The fund flows were positive, but largely on account of Vanguard buying, but 2,800 odd crores net buying from FIIs. Very curious, right? I mean, DIs tend to sell when FIs tend to buy. I always wondered how did it happen. I always wondered how did it happen that the DI buying was almost exactly proportionate to the FI selling numbers in almost in all the days in the months of Jan and Feb. And trust me, I mean, you may think I don't know much, you might know better. Please put on the Twitter timeline or the YouTube video section of how is it that these numbers used to match so exactly. It's always baffled me, really. Anyways, stocks to monitor today. I think I'll watch out for Nifty IT. Obviously, I don't need to tell this to you, but yeah, Accenture revenue growth of 28% represents another solid beat versus the guidance. And I think the Accenture book-to-bill ratio hit 1.3 times in both consulting and outsourcing, which is great for most companies in India, which have a mix of these models. I mean, remember, a lot of Nifty IT companies, Infi, TCS, etc., kind of mirror Accenture's work model, so to say. And the fact that Accenture has raised revenue growth guidance from 19 to 24% to 24 to 26% shows the confidence and how they are seeing the current landscape. And therefore, the point being, viewers, it's great for Indian IT companies as well. You heard from Birlasoft last Thursday, and if you haven't, I urge you to hear that interview. The confidence that the gentleman has in the kind of growth prospects for the company ahead, not just for this year, but for the next year as well. And that should tell you a story or two. So JP Morgan's note on Accenture is interesting. They're saying it's another strong beat and a big guidance raise despite macro uncertainty fears. They say that the guidance raise indicates confidence in demand and execution staying strong into calendar year 22 despite the macro fears. I'm talking about the JP Morgan note on Accenture. And they are saying that the attrition rates were essentially flattish, so therefore very encouraging. This is something that all of us need, right? For IT companies, that the attrition rate should kind of slow down a little bit. So JP Morgan says that their rates were flattish, which is actually very encouraging for them. Well, let's wait and watch how strongly does IT react to this whole piece. What else? Adani Enterprises. I think Adani Enterprises should be in focus, but I don't know which way, if the deal happens, if it gets structured, which way it gets structured. But Bloomberg says that the Adani Group is exploring potential partnerships in Saudi Arabia, including the possibility of buying a stake in Aramco. Can you believe this? Aramco was due to buy stake in an Indian company, Reliance, that is, the petchem business. And now Adani Group is exploring buying a stake in Aramco. That's quite something, really. Usually, they're all corporate actions happen through Adani Ent. So I'm guessing Adani Ent is a stock in focus. Who knows? It might be a private investment too, but usually they do all their the incubator of businesses and investments, Adani Enterprises, the flagship company. So that's why I'm using Adani Enterprises as the stock to watch today. Vanguard's buying that came in. I mean, all these names are now well over WhatsApp groups, but yeah, watch out. Some serious buying, and some stocks were very active. Angel One, for example, was very active in trade on Thursday. Mastec has some fabulous delivery-based buying, and NIIT had some great delivery-based buying. So all of that. New highs hit on the NSE include stocks like JK Paper, Trent, GNFC, and Titan. So I'll watch out for these. And there's some price and volume activity seen in some. Now let's move on from the Vanguard buys to the new highs. Yes, the new highs on JK Paper, Trent, GNFC, and Titan. And watch out, Trent and Titan, large cap names are at new highs. And the price and volume action being seen on Bharat Dynamics, Cholamandalam Finance, and GNFC again. So watch out for these. They are seeing some significant jump in price and volume activity there. A couple of newsmakers include some of the pharma companies because the MPP, or the Medicines Patent Pool, has granted licenses to about 19 Indian pharmaceutical firms to manufacture and commercialize the generic version of Paxlovid, which is Pfizer's oral antiviral COVID-19 pill. So watch out for this. And Cochin Shipyard has signed an agreement with Dredging Corporation of India to build India's largest dredger in collaboration with ICICI Holland. The project cost is about 950 crores. So I'll watch out for this as well. Some of you said that the recommendations that come on a Monday were useful, so I'm bringing them again from ICICI Direct. These are futures recommendations. They are giving a call on Adani Ports, a long call. They believe the stock has shown resilience in the current sell-off and largely remained in a range. It's managed to close marginally above its highest call base, which is a positive sign according to them. And on the back of short covering, they believe the stock could head towards 800 levels. It's at about 740, if I'm not wrong. So there is some upside there if you believe this call could work. Sure, go for it. The other one is L&T Infotech, wherein there's a bit of a dichotomy in that according to derivatives and technicals, it may look strong, it may look weak, but remember, IT could have a good day today. So nevertheless, with that caveat, here's the call. It's on L&T Infotech. They are saying that it's attracting call writing and little OTM strikes, which is likely to limit upsides. The OI remains at elevated levels, and they said that once the profit booking move gets triggered, the stock could head towards 5,800 levels from the current 6,100 levels. I reckon that the start could see L&T Infotech actually move up a little bit because all IT will move up. So don't quite know how strong this call would be, but remember they're giving a positional call. They would have a stop loss for both Adani Ports and L&T Infotech. So you can choose your, if you want to trade them, you can choose your own stop losses, please, viewers. But yeah, these are the calls that are coming from ICICI Direct. Couple of brokerage calls before we wrap up. Morgan Stanley on Petronet LNG. Firstly, that's the note. Let's stick with this first. Morgan Stanley on Petronet LNG, they downgrade to underweight from equal weight. The target price being cut to 217 from 253. They say it's a play on India's LNG demand growth, which they see falling for the first time in 3 years on global gas supply, as they believe it stays structurally tight. They believe the higher domestic gas production is also a headwind for LNG in 2022. This is what I was talking about, viewers, the risks to a commodity play. If indeed LNG supplies are tight, then obviously Petronet LNG gets impacted. I would presume even Aegis Logistics would stand to get impacted a bit because they are a direct logistics play on what will happen to LNG. And if LNG imports stay high, Aegis Logistics benefits. So watch out for Petronet LNG, watch out for Aegis Logistics and some of the others which get impacted because of LNG demand in India and the quantum of imports thereof. So interesting note, it's a downgrade to underweight from an equal weight, and which is why it's important. Kotak note, I mean, they are merely saying that it's an ad on Thermax, but the rationale is very interesting. They are saying that there's a flurry of mid to large size orders, which have taken the company's order backlog to 30% higher than the past peak. They are enthused by the speed at which Thermax and its customers have moved beyond the traditional orders, which is quite astounding, which is quite amazing. They raised the target price, factoring in volume benefits from Thermax's entry into the SRU EPC business through a $150 million order win. New businesses, export-oriented or rather the global businesses, which are traditionally probably slightly higher margin, and a flurry of mid to large size orders. Pretty interesting commentary there. Keep in mind, they are saying that there is an opportunity for Thermax to actually boost its margin as well, which they are keeping as a buffer for now. So interesting note. If Thermax reacts, you know why it's reacting. If you like it, if you like the rationale of Kotak, you may even choose to invest in it. But that seems an interesting note for sure. What stood out for me was this commentary from Manish Dangi. He's, of course, a markets veteran, earlier with Birla Sun Life. Now he's now investing his own money and some client money. And I thought it was an interesting point. He says that oil is an insider of war. It's the closest to the war, knows the ups and downs of negotiation. And according to Dangi, oil is telling that there is a down cycle of war right now, and peak war hysteria is behind us, but there is not an end of it. It is a long drawn thing, and it will frustrate all of us. But viewers, quite frankly, it started on 24th of Feb. People thought it will be a 2-day affair, then people thought it will be a 1-week affair, then people thought it will be a 2-week affair. For now, it is lasting, despite all attempts to bring an end to it. And it kind of vindicates what Manish's stance is. So therefore, oil is back at 111, and all the plays of playing on crude price fall and therefore buy into some of the paint companies, etc., because of the oil rationale are out of the window. Keep in mind, it's a fluid situation. It also negative for India per se, so kind of limits the upside if oil continues to stay above the 110, 120, above the 100, $110 per barrel. We ideally want oil sub 90, right? But yeah, so this is a bit of a problem. And also, what is a problem, viewers, before we wrap up, is keep an eye out for the Chinese COVID cases. They encountered the first set of deaths in a long time. But if China keeps the clamp down on production facilities and consumption, it impacts steel consumption, and that's a negative despite higher European prices. It has an impact on supply chain, if not immediately felt, and will be felt in about a quarter's time. It has an impact on commodity prices, which is why you saw Deepak Nitrite rise that day the way it did. It's a commodity chemical company because of the large presence of phenol, although it has some specialty, but largely commodity, right? So it's a bit of a mix. But it was down and then suddenly shot up 7% because phenol facilities were shut. But in an interview that I heard him talk to somebody else, he said it's a fluid situation, impossible to predict. So don't jump the gun is what I'm trying to say when it comes to some of these commodity chemicals and trying to buy them necessarily. If you're a smart trader, yes, but otherwise be careful. So lots of things moving around. Remember, Money Control did a story on Aurobindo's injectables business being close to being sold as well. So watch out for a bunch of these stories. Watch out for a bunch of these stocks that could do well, some trading positions. But largely, the move doesn't seem to be bearish as yet, except for what you do on the commodity side. Thanks so much for tuning into the Trade Setup. Have a safe, profitable day ahead.